Right, Monday, start of a new week. Here we fucking go. So, shit day. Didn't blow the account. Ended break even. Quite literally break even. It was like $14 in the green, so I locked myself out. I was I was actually $300 down from the Sunday market open. Bit of silliness. Then I was $130 up. Managed to get it all back. I said to myself, Christian Steve. Well, said to myself, I have to fucking. I want to know my fucking second name. No, that's right. Lost my train of thought there. I almost outed myself like fucking Batman. I don't want anyone to know my real name. Yeah. Oh, fuck. Not that anyone watches this shit. I don't know why I'm too concerned. Market was absolutely cooked. It just chopped pretty much all day, unfortunately. We were down quite heavily. We managed to get it all back up, and I said, just lock yourself out. Just lock yourself out, $130 in the green. And of course, we had to just take that one more trade. We ended up down all the way again, and then we managed to play all the way back. But yeah, the market just chopped around. It really didn't do anything. It's such a shame because we did actually take a lot of really good trades today. We obviously took more than we showed, but we took quite a lot of good trades. It just didn't really, we got chopped out of a lot of them. You know, we knew what was going on. We knew what it was doing. We knew where the market was going. It just didn't quite want to go just yet, which was, unfortunately, what happened with a lot of our trades. Here, we just sort of looking to get back into that opening range, fake out of the, it's just not breaking out like it used to anymore. So we're fully anticipating it popping back down into the opening range, which it did. It moved quite nicely. This is the 5-minute chart. I think I was looking at, that was it. It was we were right up there on the 200 EMA, which isn't actually on this chart. It's on my other one that I executed the trade on. But we were bouncing away from the 200 EMA, which is why I added into this. I was quite happy to add in 200 EMA on the 5-minute chart, pretty much where I've got my stops. So what I'm saying is we're going to reject the 200 EMA and we're going to come down. If I'd have had a bigger set of bollocks that I do, I would have held this trade a little bit longer, because I'm pretty sure it flushed very, very nicely all the way down, which brings me neatly on to an interesting, there we go, yeah, that was it, that's what I was looking at as well, that bull flag there, really nice, very nice. It's kind of an interesting one, really, sort of recognising that shit's just not working in this market, trying to figure out, a new way of doing things, going back to things that I used to do. I used to draw a lot of trend lines on the chart, so I did a bit of that today. That works quite nicely. We've got this one here again, just flushing down, aiming for equal lows. That yellow line running across the chart is an interesting concept that I actually used to trade before to great success. I don't really know why I stopped either. The idea behind it, which is why we keep taking shorts, which, to be fair, are playing out. Keep shorting it down, not really wanting to hold the short all the way down to it. But yeah, happy to take them. Yeah, this one came a bit later. It just, looked like it was breaking out nicely to the downside and then decided not to bother. But anyway, the yellow line that we identified on the chart there that we were sort of aiming for was actually the 9 o'clock hourly candle open. And it's an interesting one. It's something that I discovered a little while ago, and for some reason I stopped trading it. I think I gave up on the Nasdaq trading it. It was one of the first concepts that I was ever actually introduced to, was this idea that this 9 o'clock open candle on the hourly chart, that level gets retested on the next hourly chart a great percentage of the time. When you actually backtest it, when you actually look at it, it's true. So the idea came behind the concept that the midnight open, I think it was, gets retested regularly. And there's an indicator, there's a free indicator on TradingView, I think it's called the Midnight Snap. And the idea is it actually gives you a percentage probability of the chances of it going back in that trading session. And the chances of it going back to the midnight one is like 60% or something. Whereas the 9 o'clock one, I basically went through the entire 24-hour clock and was like, which one has the highest percentage of a retracement possibility? And it was actually the 9 o'clock open, which kind of makes sense because it's, you know, the market opens at 9:30, so it's like it's right there. And yeah, whether it's retested or not within that same, you know, so let's say the market opens at 9:30 and it goes and, you know, takes out the open of the candle again, whatever, it doesn't really matter. It's the idea that the next hourly candle, the hourly candle that opens at 10 o'clock, the percentage probability that it's going to go back was super high. I can't remember exactly what it was, but it was way higher. And when you actually backtest it, you can see it. It is sort of, I'm not necessarily going to say it's true, but you can see it on there. It goes back there regularly within that same candle, regardless of how far away it's run. And when you think about how the Nasdaq opens, you know, like you'll get to the top of the opening range, then you'll come back to the bottom of it, then you go back to the middle of it, then you go back to the top of it, then you go back to the bottom of it. You're just sort of chopping around. Well, yeah, it is like within that, it does quite often take out that level, more often than you might think. And when I used to backtest it always kind of worked out. But I think my problem was being a fucking idiot that I am. I was just willy-nilly taking a short at whatever level I wanted, with the idea that it was going to go and take out that level. But then it had, you know, put me too far into the drawdown first, and I was like, oh god, this isn't working. But actually it did. So yeah, we'll see. It's just another little key level to point out. It's not necessarily something that I'm married to, but it's just an interesting key level that I've been looking at a little bit more just recently. But obviously there's been so much silliness with the way I've been trading at the moment. I've just sort of lost all mental sort of capacity to do anything sensibly at the minute. So looking at that key level has not really been on my mind. But yeah, start of the new week. Sort of thought about it over the weekend. And yeah, that's what I think I'm going to look out for. Certainly, you know, within the first hour of the market opening is, you know, what direction are we moving? Is it coming back? Is it starting to retrace towards that level? If it does, can we target it? Might be interesting, might not, but it worked out today. It's just the other silliness around those trades that happened that, yeah, we should have locked ourselves out when we thought about it. The market just chopped so badly, it just, yeah, anyway.